All right. So I'm with Tommy Humphreys, the founder, co-founder, I'm not sure what the right word is, of CEO.ca, and an investor. I think you're a full-time investor now. Is that right, Tommy?
I guess so. I guess
Well, what would your job title be if you had to tell somebody your job title?
I usually tell people I'm a web designer because it ends the conversation really quickly. And and it's hard. It's hard. I never knew what to say. I was always insecure about what do you say when someone asks you that question? What do you say when someone asks you that question? It's like identifying
I,
your
it,
status right away. Like, what's your status? You know?
yeah, I usually, it depends upon the person asking. I make a call on how deep I want to go, with the description, but usually just say I'm an investor and a market commentator. Like if I just want to keep it simple.
Or think about Godfather 2, Hyman Roth. He's coming in the airport, and he says, "I'm a retired investor living on a pension." Uh, I love that movie.
Yeah, that's a classic. That's an absolute classic. So, I asked you to do this conversation because I think it's a conversation that's been a long time in coming. And I met you in 2010, and we have that photo on the rooftop in Manhattan where we were attending a conference there. I think it was like probably September 2010, if I'm not mistaken.
Yeah, I think it might have even been later, like
November.
October or November, something like that.
Yeah, yeah, okay. Yeah, and we hit it off because we had some things in common. And also you were pretty early in your investing journey in the junior mining sector. And I was also fairly early as well, although I had the experience of my father being pretty deep into it for a while. And fade the scene several years later, and you found CEO.ca. I think around 2014, 2015 time frame. CEO.ca sprouts up. And it's something that we had spoken about, that this concept of an investment chat forum for microcaps in Canada. I think we tossed this idea around for a bit, and then you did it. And there was quite a journey there. So I want to delve into the CEO.ca journey and how it happened and why you said, okay, like I got to do this.
I think I think there's a chance that we met in summer 2011. The reason I was saying that because 2010 I was still sorting it out, and 20 and at the end of 2010, so I had this web design business, and we ran out of money basically. But very fortunately, I met Joe Martin, and through Jeremy Martin, and now Jay Martin runs the Cambridge House show. The Joe Martin was the founder of Cambridge House, the junior mining trade show in Vancouver, and he had a few employees that had left. I don't know if it was in a mutiny, but there was a big conflict, and so his conference, which was very big and popular, had a hollowed out management team. And Joe said, I'm looking for people, website stuff, can you just come and help me? And I was just transitioning out of a small business doing web design, and was super beat up. So it was a very fortunate meeting, and it let me see Joe's business, which was having 600 junior mining companies come to a conference and have a bunch of influencer speakers come as a draw and get the public in, and as Joe used to say, promote the promoters to make sure they're happy and buying booths, and put on a convention for this space. So that was an incredible opportunity for me because it was a center of influence to meet people, and that was the basis that I was at that conference, I think, with you. Now there is a chance, memory's funny. There is a chance we met the year before that because I went to a couple of those conferences, those Ritholtz conferences. Um,
Yeah, I'm trying to think, and I think you're right. It was 2011.
it could have been 10 or 11 because I went one year on my own, and then I went the next year as a Cambridge House marketing guy.
Hmm.
But you know, Barry Ritholtz, who's now the Bloomberg podcaster and one of the original bloggers and has the Ritholtz Wealth Management, he was hosting this big picture conference, I think it was called. And I loved the content that he was making, and the idea of these bloggers in finance, and you were one of them, right? At the dawn of StockTwits. And so backing up a second, StockTwits was something that I just immediately gravitated to. You were a huge player on it. I mean, that's you were one of the stars. And so I was on StockTwits. I met Howard Lindzon through, being a user. He replied to everybody when they first joined. Howard was the founder of StockTwits. But I reached out to him and said, we're working for this conference in Vancouver. We've got 10,000 investors here. Would you like to speak? And so he spoke at a conference in, I'm going to say June 2011, the World Resource Investment Conference. And he came, and we were able to meet in person. And Canucks were in the Stanley Cup Finals at the time. Howard and I went to, I think, Game 2.
Oh yeah, that's right. That's right.
And so I got to, get a bit of a relationship with him.
Yeah, he's from Canada, actually.
He's from Toronto. His father
Yeah,
was
he's from Toronto.
for Murray Pesum, apparently, once upon a time.
Oh wow, small world.
Everything goes back to Howe Street. So I'm at that conference with you, and I don't know how Howard knew Barry, but being Howard's +1 at that conference was like so cool for me, because Howard knew Josh Brown and Joe Weisenthal and Robert Sin and JC Peretz was there, and it was like, you guys were, a bit older than me, but doing really good things in the market. And I was like, wow, like this. It was really fortunate to be, with Howard in that group, and we went out for a dinner after. But I remember meeting you on that beautiful Midtown rooftop, and you had a big blue suit on. You were much younger. You did not have a gray beard.
Yeah, I didn't have a beard at all.
But in those days, I was thinking, Cambridge House, this conference, has all these junior miners paying to come and be at this conference, and then StockTwits is doing something really interesting in the U.S. And so the concept was floated to Howard was like, we'll do StockTwits Canada, and we'll monetize it by having junior mining companies. We'll have booths on the website, basically. Like I thought that if StockTwits launched a venture Canadian product, that maybe the issuers, the public companies, would pay a few $1,000 to have a premium platform and some data on the site, so they could do some marketing similar to what they were doing at the conferences. And Phil Perlman, who worked for StockTwits with Howard, he was like, hard no. Like, we don't want anything to do with this Canadian penny stock racket. And so Howard kind of liked the idea, and kept me warm, but Phil and the direction of StockTwits was like, look, we don't need this or want this. So at that point, I had made some inroads with you guys, and started having, Josh and a few others came. Joe Weisenthal came to the conferences when I was working for Cambridge House, but the idea of the Canadian StockTwits just like died. But in the back of my head, it was like, I don't own Cambridge House, and Jay and Jeremy Martin were like the clear successors. Originally it was Jeremy, but then Jay came onto the team. It's like, this isn't my business, and ultimately I'm going to have to do my own thing. So I was just like mid-20s and hopeful for the future, and saw that this Canadian venture market had a lot of wealth creation in it, just from knowing the big houses in Vancouver were built by the mining promoter people. That was all I needed to know. But I had this experience the year before when I was promoting my web design business. We have a local business magazine called BC Business in Vancouver. And funny enough, Joe Martin, I think, was the founder and owner of it back in the day, BC Business Magazine. He had sold it and then was doing his conference stuff. But BC Business was, to me, it was like one of my goals in 2009. I was like, I'm going to have our little web design company featured in BC Business. Like, it was like one of my silly goals back then. And the BC Business channel on Twitter was really good at was building community and posting all the time. John Bucher was the guy who was running it. He called himself the Ghost in the Machine. And John said once, like, I want to play golf this weekend. Anyone playing? And I was like, this is my shot. And I replied, like, I can get us tee time. Let's play. And he responded yes. And so a couple of days later, I'm playing golf with the guy who runs the Twitter channel for BC Business. And sure enough, on the sixth hole, he said, why don't you write for us? And I remember it's the sixth hole is downhill hole because I didn't ask, but I was like hoping for that kind of outcome. Like, sixth hole, this is good. This is early. 12 left. Now I've got the sale. So he gave me an opportunity to write, and I had never published anything, and nor was a strong student in high school. Like in grade 10, grade 10, I had to have like special attention from the English teacher to teach me how to write a keyhole essay. And I remember being identified as someone who was like falling behind, and getting some special attention, which very grateful to Mrs. Edna Whittemeyer, for catching me up. But when I got the opportunity to write for BC Business, it took me 4 months, I think, to write the first post, which was 250 words. So could you imagine, like, you're so prolific, right? But I sat there, holding the keyboard, and I'm just like, what the fuck am I supposed to do? and everything is, as a 26-year-old, like, everything is, what does this look like? What am I going to look like to others? And I want to be smart. I want everybody, I was so insecure and thought this was a PR coup, but I didn't know how to write and how to add value, how to be authentic, etc. So there was a few friends that helped me, and slowly but surely I got this post online. But why am I telling this story? So that helped me with the connection with Joe. And because I was writing for BC Business Magazine, so I was sort of like already a business writer. A year later, I had done a weekly column in BC Business, and I thought it was pretty hot stuff. The posts are like so dumb. Like, you can look back at like the title of one of them is like "Blog and Ye Shall Receive."
It's funny. Just to give you a second to catch a breath there, it's funny as a blogger and as a writer, whenever we look back at our old content, it's like usually with a cringe. I mean, sometimes I look at something I wrote 5 years ago and I'm like, yeah, that was pretty good. But often I'm just like, damn, it's like we're always getting better, we're always improving, and we're always trying to add a little bit more style.
You're like Rush Limbaugh, though. You're doing 3 hours a day on air every day, and it's impossible to have it all be great, right? So
Yeah.
The point, the point was, so there were these guys that I grew up with, Hani El Reyes and Paul Clough, and they were 1 year younger than me, but I knew them as kids, and they were enterprising and fun and funny, and we enjoyed each other's company. And they had somehow berated, bullied, cajoled the consulting engineers of Ontario to give them CEO.ca, consulting engineers of Ontario. Like, they had just called them and hounded them, and they're very persistent guys. They work as promoters, shockingly.
Consulting engineers of Ontario. So they had the domain.
They had the domain, yeah. And Paul and Hani had sort of showed me, they sized me up as the natural buyer, because I'm like, I'm a web designer and I'm writing for BC Business. Like, this is the guy who should buy this domain. And they're like 15 grand and it's yours. And so that began a 2-year negotiation, because I didn't have that 15,000. But I'm learning a lot. I'm working for Cambridge. I'm meeting guys like you and inspired about financial bloggers and this new market I'm learning in Canadian venture capital. And then I'm walking on the seawall. I believe it was March 2012. And the downtown Vancouver seawall, like we walked there. It wasn't last
Hmm.
year. I gotta, I'll be there in 90 minutes. It's one of the most beautiful places in the world. Um, I run into Paul, and Paul has blown out his car somehow, and he's got urgent a car repair bill, and Hani, his partner, is in equal dire straits, and they're like, just give me any bid, just give me any bid for the domain, and it was a beautiful morning. Um, I remember going back, like, I remember funny things about this day. Like, I can remember drinking my coffee after I had seen Paul, and I had about 3,500 bucks or something like that to my name. Maybe I had 5,000 or 3,500 from savings from the website stuff, which at one point was more, but had dwindled. And I just remember, I'd heard this line, it's a biblical line, is like, from this rock I'll build my church. And I remember thinking, like, drinking the coffee and just feeling like this is the right thing for me. And so I gave Paul an ounce of gold and an ounce of silver as a deposit and got them the money. They moved the domain to me, and I was like, boom, I now own CEO.ca, which is like so random. It's not like I was originally intending to, I wanted the name. It was just like a random thing, right? It was like, this could work. And
That was a good trade, Tommy. March 2012, you traded gold at, I think it was around 1,800 an ounce, and that was basically a good time to be a gold seller. And you bought the domain that would eventually lead to millions of dollars. So
well,
so that
I
was a
think
good trade.
I think I got, if memory is funny, but I think I got the coin back once. That was like the deposit. And then I
Oh,
gave them the cash. I got the coin back because I think I still have the coin.
oh,
Um,
so they wanted the cash, like they didn't want to deal with the
no,
gold.
no, no, no. Um, where was I going? So a year or two before, there was a business in Vancouver called Vantage Wire. And I don't know if you ever heard of it, but Vantage Wire, when I came into the junior market in 2010, Vantage Wire was like the hot ticket. They had sponsored the Canucks, and they were offering free real-time stock quotes. And they had a group of young salesmen who were basically selling to junior mining companies sponsorships and promotional packages. So investors would sign up for free real-time quotes, which Vantage Wire would subsidize. They'd pay a penny per quote or whatever. But then they would sell those subscribers to junior mining companies to blast their news releases to, and have ads on the site. So Vantage Wire had this like really cool office downtown that had like stock tickers rolling, and they had six handsome salesmen selling expensive packages. They were making millions of dollars, and I talked to them um, a few times about, like, how would I do their website differently. I remember feeling like, wow, if only I had just come to this space like 5 years before, and because I could have built a better Vantage Wire. That was
Mm,
my mind. I was like, but I'm too late. That's what I thought. And
too late.
yeah,
Yeah, but you weren't too late.
so the big idea of like a new stock market website, just it seemed too far-fetched. But anyway, Vantage Wire, those guys sort of disbanded, and one of them, actually, one of the founders, recently died. But one of the the youngest partner, was Neil Curry, and he runs Capital Event Management. He's a
Oh, good.
good guy, a very savvy, smart market guy. But yeah. So seeing Vantage Wire and knowing a bit about Stockhouse and stuff, and trying to do the StockTwits Canada. Well, none of that got going, but 2 years later, a year and a half later, I now owned this domain with 75% of my capital. I was still doing consulting part-time, Cambridge House marketing guy. So there was a conflict at the beginning where, I was marketing this trade show. I was, making videos and hosting content for the conference, and I had this new domain. And at the very beginning of the domain, it was like we were just aggregating links. Remember back in the day when people would do link fests, Robert?
Yeah, I do.
Like, it's so funny. But I would just do a morning link aggregation thing, and
Yeah,
I'll.
I remember that. You were following the Josh Brown model. Yeah.
But I mean, Josh was actually good at it, and I remember a few times I would make posts and like James Altucher once linked to it, and Josh shared it a few times, and so like it was really inspiring to know you people, and to you guys had such a bigger platform than we ever had. But by making the conscious decision to do the junior penny stock content in Canada with like issuer sponsors like Cambridge House had, I remember at one point, you know, just not the tap being turned off, but like everybody said, like you're on your own with this, basically. You were one person because of your story with your dad making money in juniors. You kept talking to me, but all those other relationships were like um, going down a different road, which and a better, bigger, more sustainable thing. And it's incredible to see what Joe did. Joe Weisenthal getting a part of the Business Insider sale and now being the Bloomberg guy. And like I'm super happy for him. He's got a nice family. Do you remember how hard he worked doing those stories on Business Insider?
Oh my God, he
Like
was
that was a sweatshop.
obsessed.
That was a
He
sweatshop.
was obsessed. Yeah,
And
just absolutely obsessed.
JC, buying or building a newsletter, selling it, buying it back. He's got his winery now, and he's like killing it. And then I don't know, like Josh is just such a gorilla. That guy, like Josh Brown. I mean, you were way closer to them than I was, but Josh, probably he's the best guy on CNBC, like the most interesting, the funniest, best personality on CNBC, CEO of a brokerage firm.
Yeah, the thing about Josh is I remember reading one of his blogs for the first time in May 2010, right? The flash crash had happened, and he was a prolific blogger by that point, the reform broker.
Yeah.
And just like, oh, I love this guy's stuff, right? And maybe there's been like 10 times in my entire life where I read something new and I was blown away by it. And I was like, I love this. And that was one of those times. And I loved his blogging for several years. Obviously, he doesn't really write that much anymore because he's so busy on TV and stuff. But, you just knew that guy was going to be a rock star. He has incredible, gift with words, storytelling, and he comes at it from a very authentic angle. He's not afraid to tell it like it is. Yeah, and we sat there and had beers with him in Manhattan there in 2011, and it was a blast. And
He came to Vancouver once and spoke at a Cambridge conference, and
oh,
I took him for dinner at Il Giardino, and which is a great Italian place. And was so excited that he was there. And this was 13 years ago. He probably would have had 75,000 followers or something back then. Not that that matters, but I remember the Cambridge people and people around the event were like, why are these people here? Like Joe Weisenthal and Josh Brown, like, what are they doing here? I'm like, isn't it obvious? Like this guy is gonna own all of this financial media stuff. It was so obvious to me, and the turnout for I'm still embarrassed about it because the turnout for Josh's speech was like not that great. There was like 30 people in there, and I was like, oh my God, I want this guy all the way here.
yeah, because the problem is the junior mining sector is still this ancient sector where you have an average age of 65, and a lot of these guys just don't know somebody like Josh Brown. I mean, especially back then, because he wasn't on TV yet, right? And they just don't know any better. They want to hear Rick Rule speak for the 100th time.
I think 65 is a little young, but
Yeah, true. Okay.
anyway, I it's been inspiring to watch everybody's trajectory, and I felt like chose the different path here, but owning that domain and then having this break from Cambridge House, like I got an opportunity to do 3 videos in the summer of 2012. I was like, I'm going to launch CEO.ca with. I had been doing the Link Fest, but I'm going to launch it with this interview with Frank Giustra. And one day in August 2012, I filmed Amir Adnani, Nolan Watson, and Frank Giustra in the Vancouver club hotel. I had a professional videographer, so we spent $3,000 for lighting and venue, and I made these 3 really cool interviews, and I filmed them all in one day. It was like a grueling day. I had a suit on, and I had really wanted to do the story with Giustra because he had published these articles around 2002 about gold, and then he'd done all this corporate work, all these companies, and made all this money, and hadn't done any interviews or published or anything. So I thought like there was a vacuum around him of like, here's a track record but no content. And now you know you see like Frank's in interviews all the time, but in 2012 he hadn't done anything like that in probably 7 or 8 years.
Mhm.
So I got to him through a mutual friend who was a girl that knew us both, that she introduced me. I went to his party, and then like I slowly kind of got to know him. And not he wasn't invested in me or anything, but I had this unique thing happened in 2012 summer, where one of his companies had an oil discovery in Colombia, and the market was so quiet in 2012. So I wrote a story about it and did interviews with a few people that worked there, and he liked that story because it gave him something to share about what the company was doing. I interviewed the chairman and the CEO, and it was like a turnaround stock. And I remember the web address was CEO.ca/PTA. That was the link.
Pentanova,
It was called Petro America. Petro
Petro
America.
America. Okay.
I love that story. Takoa da Silva, who
Oh man, yeah, that's a
helped me with
blast
it.
from the past.
Takoa's
Wow.
he's on Twitter again. But Takoa helped me with the story. And that gave me the reciprocity with Frank. He was like, okay, like maybe I'll give this guy some time or whatever. So I did this story, and then I was like, look, what I want is you to do an interview with me. And when he had he had this link, CEO.ca/PTA, and he shared it around, and all of a sudden it had visibility into the subheadline. I'll never forget: energy heavyweights engineering a turnaround in Colombia, or something like that. So it captured what was happening, and the stock went from 10 cents to 40 cents in the next 2 months. So it was like there was good momentum there, but it helped him, and I asked for in return, I want to do an interview with you, basically. Um, yeah, that that day that I filmed those interviews was just an absolutely pivotal day, because I had given up my lease to leave Vancouver. I was renting this apartment in Vancouver, the one that I have the picture of in the Cambridge House interview I did this year. A Cambridge House speech, where I put the picture of the red brick building is how I started the speech. But so I basically filmed these interviews and left town, and I got a little apartment in Toronto. And on like day 2, I got the links. Like the producer was John Roth, was helping me, and I started like bang sending them out, bang, like one per week of these cool videos. First it was Frank, and then forget it was Nolan or Amir next. But in 2012, there was no Real Vision and there was no Fin YouTube, so like there wasn't any corporate high produced video interviews online. Um, I actually I toot my own horn. Obviously it was going to happen eventually, so I'm not like it was that groundbreaking. But people like Grant Williams, you remember, things that
Mhm.
whom like he was giving me shout outs. I think those videos inspired him to be doing more, and then he founded Real Vision. So now the internet is just rife with these long form podcasts and videos and Zoom
Oh
calls.
God, it's everywhere.
But there was not the case in 2012. And so this video with Frank gets 200,000 views in the first week. Like it was just like so viral.
That's incredible
Yeah.
for 2012. And again, Frank, technically, I mean, you could say he's a billionaire. He might have been a billionaire then. I'm not sure, but anyway, he was known, but he wasn't famous. And in fact, I didn't know who Frank Giustra was until I saw that interview, right? And even um, somebody who was aware of the junior mining sector, his father was deeply involved in it for a while. I didn't know who Frank Giustra was until 2012, until Tommy Humphreys did an interview, with him and blasted it out to the world.
Well, the title was A Billionaire's Bet on Inflation. And that
Mhm.
was after a financial crisis. The B word is one of the most tantalizing clickbait words out there. And
Especially in 2012, because there weren't as many of them then.
true, but I think like Joe Weisenthal, at Business Insider posted it up, and I was getting link backs from All Too Sure and like whatever people, and it really did well. And that was the sort of the launch of CEO.ca. Like the next day, my phone was ringing from people, and there was a contact at Brookfield, which is one of the preeminent investment institutions in Canada.
Mhm.
Like, people wanted to talk to me overnight because I had access to Frank, and I had done this cool thing, and I had this new blog, and so
Mhm.
that uh, precipitated a break from Cambridge House because that was the first video. It had Cambridge House logo and CEO.ca on it, and now I had I had the conflict of who am I really working for? And I overstayed my welcome with Cambridge House for 4 or 5 months after that, and it was getting the consulting piece from them, and but putting all my effort into the website, and started getting you know uh, doing all my business around the website stuff. And so by I don't know if it was January the next year, something like that, they were like, get out. And today, Jay, Jeremy, and Joe are fortunately dear friends that forgave me um, for being a crap employee for the last 6 months of my tenure.
So,
Um,
so, so when do you say, okay, we have Stockhouse, we have these bull boards on Stockhouse for Canada, which are very simple, as low technology as you could basically get on the internet. We have StockTwits in the US. StockTwits is growing a lot by 2012, 2013. You're inspired by Josh Brown, by Barry, by Howard. Um, you've now made the contact with Frank, Giustra. You've done the interviews. You're more well known now. When do you say, hold on, I gotta take CEO.ca to another level?
well, like the Reformed Broker and the other and your blog, um, it was just a channel. Like it was me making posts every day at the beginning of CEO.ca. And I was trying hard to try to do like sort of entertainment and link roundups and a bit of insight. And then, um, I don't know how quickly, but Travis McPherson, he had, was working for Haywood as a broker, and then a Gold Group, junior minor, ended up, being another young guy like me who is sort of in between opportunities, like looking to brand himself in the business. And so he came and became like my other writer on CEO.ca. So now it's Travis and Tommy posting all the time. And so quickly, CEO.ca was a unique source of investment gossip on junior minors in 2013 and 14. Um, I was really lucky that nobody was doing this sort of stuff at the time. Like I think mining might be over mediated a bit now. But in those days, there wasn't anybody asking the question. So I got this amazing access to Ross Beatty and Lucas Lundin and Frank Giustra and Robert Friedland, and I went on trips with all these people, learning about their projects. It was so cool and inspiring, and I started getting I'd been doing some investing with in each of people's deals. I had I was trading some of the stocks, and I got into this one deal with Frank called Catalyst Copper that ended up being like a huge, surprising 20 bagger. And I was after PTA in 2012, I was really following closely these Colombian oil stocks and was trading. I had a win in a oil stock in 2014, and it was the first time that I had monetized this serious money for me. Like at one point, when you make your first sort of $20,000, or $30,000, like you can rent a nice apartment, you can buy a few pieces of furniture, you can feel like a boss. Like that's life changing. Um, and that's more meaningful than a guy with 5 million making another million.
Yeah, it's true.
So
It's true.
those were really fun days. So this these few wins in 2014 had enabled me. I'm like, okay, now's the time I can. I lived so modestly. I had a cheap rent and I had for several years had no money to spend. So I did not have high burn rate. And I had extra money and I was like, okay, I'm gonna use this to invest in the site. And so I did two things. One was I bought Lawrence Roulston's newsletter, and it was He with Lawrence. That was summer 2014, June 2014. Lawrence Roulston was a geologist who had one of the biggest investment newsletters from the cycle of 2000 to 2010. And he spoke at all the conferences, and he had 6,000 paying subscribers at the peak, and he wanted to get out of the business. And so somebody let me know about this opportunity, and I bought it for not much money, thinking this was a cheap way to get a list and get into this space. But I was immediately feeling like that time where I got the opportunity to write for BC Business, and it took 4 months to do a post. Like I just felt immediately like a fish out of water.
Yeah, I remember that time. I remember that time. Like I remember helping you with one of
Yeah.
the, the editions of that, newsletter. And
Thank you.
also you bought that list after he had drug it through a bear market for 2 years and the sector was just awful at the end of 2014, early 2015 was probably the worst year I've ever seen, right? And I wasn't even like deeply involved. I didn't have a huge portfolio at that time, but I saw the pain all around me. Roulston, I remember his salad days, like 2004. Like my dad loved his stuff. He would jump to his email when that came in and go call his broker at Scotia to buy the stocks that Roulston was writing about. That was how powerful his voice was for a time. But then by 2008, 2011, 2012, you know,
I think in 11 it was still good, but by 12, 13 the market rolled over.
yeah,
And so
he had no stroke left. Yeah.
it wasn't the stroke. Like I bought I mean, he passed the bag to me, right?
Yeah, he passed.
And so I'm holding this
Yeah.
thing, and he's got, all these paying subscribers. They're down 80, 90% on a bunch of stocks. The market's over. And he was covering like 50 stocks. And I'm like trying to do updates, and the subscribers are writing you like, what's going on with this? I remember seeing there's a prominent real estate agent in Vancouver. He's like the guy, the most sort of famous realtor. And like he accosted me at a restaurant, or probably I don't even remember where, because he'd lost all this money in a Roulston pick. And I'm like, I never even owned the stock. It was chaotic. And then I also had the CEO.ca, which was growing and cool. And then I bought this newsletter, which it's a different animal, and it was a dying thing. Pretty quickly I had James Quantis was helping write on CEO.ca, and he gravitated to it more. And I think within a year I gave it to James. I'm like, James, like I can't do this. And so he owns that, and I don't know. It's sort of merged into what his publishing things. I think he's got a Patreon and a few different services now. But that
Resource opportunities. Is
that
that
was what it
the-
was called.
Yeah.
So that didn't work. But at the same time, I made two bets, because you got to have a portfolio, right? And I knew web design, and when my buddy McCully and we were web design salesmen in our early 20s. We were like hot shot, yes man, kids that were, we'd show up and tell you, yeah, we can do whatever you need. Oh yeah, we can do that. Yeah, we can do that. Yeah. We were salesmen, right? And we had so many web projects that we learned, they're way harder than you think. The scopes are way more difficult, and it was humbling to. I mentioned in 2010, like we were broke, right? But like where we started was we were slick salesmen, and where we ended up was like, beat up. And so I was just so determined to avoid hiring me 4 or 5 years before. And I was so I interviewed all these web design groups, and most of them actually reminded them of me, which was a person who will tell you what you want to hear, really keen for the business. Yeah, I can do this. And I was just determined not to hire an agency, and I wanted to hire, one good partner that could work closely with me to collaborate to build a site. So I went through this process of trying to find someone, because I had a vision for CEO.ca of jobs boards and stock quotes and all the stuff that over time I had hoped to tackle.
Mhm.
And Travis McPherson and I, we went to, on the advice of a friend, Nick Molnar, who's like CTO of one of crypto's hottest companies called XMTP now. Nick Molnar says, you need to go to Lighthouse Labs. This is a web design school. So Trav and I went to this Lighthouse Labs demo day event, and all these kids had just learned to code in 2 months. And I made a blog post on CEO.ca about how Lighthouse Labs was cool. Next thing I'm talking to the an HR person at Lighthouse. I said, look, I need help. I need someone good who can help me. I know so many fake coders, like we're all bullshitters in that space, internet marketing space. And she's like, I think I got somebody for you. And next thing I know, I got a meeting arranged with a teacher at Lighthouse Labs, and his name is Murat.
Murat.
Murat. And so I meet Murat in Gastown. I think he wrote some sort of moped or something there. I think he had a helmet, but I was just
That
like,
sounds right. That sounds right.
I was just like, he's like, I just immediately knew, you know, like that's the guy. That's the
It
guy.
was love at first sight.
Yeah, and I remember telling him, like, uh, I just remember feeling like, um, all the good web people, they don't want to work with like a business guy. And I was like, a guy was parting my hair and wearing dress shirts and stuff, and he was a cool young coder, and I just remember feeling desperate. It's like showing up for a date, and the woman just knows you're desperate. And Murat could see that, and I knew it, and I told him like, this is like, I need, I'll treat you well, but I'd really like your help. And I could tell that he had done something. He was the right sort of person. He had created a little chat product. I forget what it's called. T-Orbit, it was called. So he had this beautiful little chat thing for his class called T-Orbit. And I was like, man, that is way cooler than anything we have. And I sent him, after that lunch in Gastown, I sent him $2,500 and said, like, let's go. And within a week or so, he had made a version of T-Orbit for CEO.ca. It was chat.co.ca. So for $2,500, Murat we've got a new chat product for this market. And I knew I was super lucky to have Murat there. So I was like bringing him wine and taking him out for lunch, and giving him money when he wasn't asking for it, because he's
Oh,
so
I love when people give me money when I don't ask for it. That's the best.
like he was so good and so modest. And I knew, this is one
You
of the smartest
you
things to
knew
do.
you
Just
had
hold
found
on to him.
your golden goose.
I think so, yeah. I mean, he's so cool, this guy. Like, he's so cool. Um, like, Murad is a funny guy. Like, he's
So
good.
he built the chat for you, and I recall that early version. I think that was probably late 2014. And then,
Yeah.
when do you say, okay, like we're gonna scale the whole thing up, and the whole thing is gonna be just a chat forum. Like, there's not gonna be really a landing page per se. It's just gonna go to a chat page.
I think it took a year or two, but I remember, so when we had this first version of the chat, like, I was so obsessed. We were staying up in Whistler with my family. Like, my brother was there and a bunch of people. We were doing a weekend in Whistler, and I couldn't look away from my phone. I was just like putting messages into this chat, and it was so fast, and I was like, I was completely obsessed and not present. And I knew it was a cool product. So we launched it quite quickly. I remember at Cambridge House show in January 2015, January 2015, I remember talking to Alan Labucan. Remember Alan, he was like, just, so it was already out there. But that year of 2015, it sort of evolved where maybe I could get 30,000 views making the blog, but like quickly the chat site was getting equal or more traffic. And at that time it was one big chat lounge where people were coming and everybody was having their conversation in the index, the main chat. It was like a water cooler kind of thing. At the end of the bear market, we had like Doug Ramshaw was a great user. And, I just remember it had a really cool culture and people were sharing mining tips and different pieces of news. And so within a year or two, but I think it was just 1 year, the chat site had sort of flipped and we got like the blog became secondary. And it took a while to learn, but we had writers for CEO.ca who were making good research posts, but what I was paying for, like the traffic that they were generating was like a thousandth what the chat was doing, and so people were just way more engaged with the chat stuff, and it was like we should be having more technology products, less content budget, more tech budget. And so Murat had a little team, and then we made the channels and we added the stock quotes and the SETI data and iterated around it. But yeah, it was fortunate because the other products in the market weren't a mobile first and fast. And this is now 10 years ago, but it was so fast. It's not as fast today as it was then because it's just got more ads and things like
It's
that
got
now.
more. It's got a lot more ads. Yeah, yeah. It was pretty light and quite nice concept. And yeah, like I do recall that for a while it was just all on index and it's kind of hard to follow.
Yeah.
But then when the company channels got to be added, or features like private channels got to be added, and definitely with SETI, news links, then it came into its own. And I think that was sometime in 2016, like all the bells and whistles were added to the platform, and suddenly you had a robust and absolutely necessary for anybody who's really interested in microcaps in Canada, the junior mining sector. Even if you trade on the OTC in the US and you don't actually trade on the venture or the CSE, you need CEO.ca because of all the tools it gives you, from the level 2 to the lightning fast, links to company news, to the chat and what people are saying. And actually, so I joined in early 2015. I just looked at my handle. It joined early 2015, so I must have joined January, when you started it. And thinking back to those early years, 2016, 2017, 2018, some of the people on CEO.ca, some of the accounts were really good. The content that you were getting for free, getting free access to, the voices that were just telling you their research, their take on the news, what they were buying and selling, was priceless. So you had built the venue where everybody came, all the best ideas, the best brains, the best minds in the sector, including executives, CEOs,
Newsletter, right?
came.
It was really
The
like,
newsletter, yeah,
but the best part about it all was, excuse me, as we were building in 2015, it's the end of the bear market. And,
right.
so I remember it just by coming, so you have this cool product in this organic community where people are sharing and everything is so cheap, right? Everything is like shells are trading at cash and 10 million market caps, huge. And it was such a great time in hindsight. And then you have the 2016 turn, and by February 2016, gold went, I think it did like a 1050 to 1500 in 3 months or somewhere 1400. And the sector went crazy. So that was like a gas on the fire of CEO.ca. It had something cool and organic before, and then the market turned, and then it took on a life of its own. The traffic.
Yeah, 2016 was a great year. It's a great year for this for CEO.ca. It was a great year for you. It was a good year for me. Um, Nothing like people making money and a little smell of greed in the air.
Yeah, I wish, I should say I wish that was the first year that I was, after starting in 2010, that was the first year where I was like, I was, I was flying first class. That was pretty good. Yeah.
20, so your biggest win in 2016. What was your biggest win in 2016?
Elix, Lithium X for sure.
Lithium X. Yes. Okay. Lithium
That
X.
was started in summer 2015 and IPO'd November. It was 40 cents in January and it was 220 in March. It was like,
You caught lightning in a bottle there with that one. That was an incredible move.
but I had this
Uh,
in this, we did a stock picking contest that year and I was like, it was like NexGen at 40 cents, Licks at 40 cents and one other name, but you couldn't have, you couldn't miss for a bit.
those were your picks in 2016. You had NexGen in the stock
I
picking
think I had
contest.
next gen at like 37.
Oh my God. Hold on. So you won the stock picking contest that year?
I think I won it the first 2 years, but
Oh wow.
and then
You know, we gotta tell the guys in Toronto that they need to put up a Hall of Fame, CEO.ca Hall of Fame, and list the winners of the stock picking contest going back to the inception. And like
good idea.
the World Series of Poker, like you gotta have your Hall of Fame and pay homage to the great investors of the past.
I thought it was a bit much because like I owned the site, like to be honoring myself with.
No, but to pick, Lithium X and NexGen at the beginning of 2016 is just incredible. And that's the kind of value, free alpha that was being handed out on the platform. I mean, I'm not obviously I'm biased because I've had a hand in this and I'm the
Yeah,
most followed account, but it's true.
just put that in there, right?
Yeah, it's true. Like a lot of good ideas, and so many guys were on next gen at 50 cents, at 60 cents, at 70 cents. I mean, it was the
I,
most
I'm thinking
popular.
high ROI. Shout out to high ROI. He was a
High ROI Pamplona Trader.
Pamplona was massive.
Yeah.
But I didn't stick. I left the party at 250, which was a huge mistake. But
Well, I mean, that's still almost a 10x. It's a huge win. I mean, we can always cry over the gains that we miss, but I mean, how many people are picking 8x's and 10x's? Not many. A lot of people say they did, but they really did it,
I mean, I guess in 2011, 2021 was such a shit show in the stock market. But like, you know, you've heard the quote, the Canadian penny stocks are like Vancouver weather, 80% shit, 20% spectacular. And it seems like every 5 years you get this euphoria and you know, it's not like it happens every year. It was the pain of the previous 4 years had paid for that moment, but it was a good time. And then coming on the back of it, like as 16 rolled over and 17 was no good, like you know, it's tough for the site because the site is like a living organism. It's a community of people and it swells when people are coming in, and then if people are coming in, this is the classic. Roulston had 6,000 subscribers at the top of the market, and at the bottom of the market, when people should have been paying the most attention to his ideas, it was 300, right? So people
Yeah.
come in at the wrong time, and then the community suffers, and yeah, there were a lot of growing pains. It wasn't a straight line, but the good thing for me as the owner of the site was that the traffic had grown like really truly exponentially, and by 2016, I'm sure we were millions of views a month. And then
You were growing. I remember at one point the views per month were growing like 20% every month, right?
I don't remember exactly how many what the monthly return was, but it was massive. Like you were getting a doubling every couple months. So maybe
Yeah.
and it didn't stop until I think it peaked out. I think it peaked out when we sold the site in August 21. That was the high of the market. It peaks with the market. If there's euphoria in the market, the site is super busy, and then it slows and consolidates. And so I think would likely have a new high if we have a bigger, busier gold bull market ahead of us. Which
Yeah,
you know the charts. It's looking good.
yeah. So let me ask you about that. So first of all, there's a few questions here, and then we'll wrap this up because it is pretty lengthy. I mean, maybe this is a 2 or 3 part conversation.
I'm very
But
verbose. Sorry, buddy.
you sold. No, this is great content. So you sold in late 2021. You passed the reins over to another group of guys who now run the site and have put a lot of energy, a lot of money into it, a lot of new ideas on how to monetize. They're selling a lot of ads. Seems like they've got a lot of deals with a lot of junior mining companies. Definitely high high cost of overhead, but they got a lot of revenue coming in. So this is sort of scalable model where in a bull market they could do really really well. Um, what have you noticed about CEO.ca since you passed the reins? And what do you see that you like about the site today, and what would you maybe do different or improve upon?
Well, the site is not that different than it was, right? And so the thing that they did brilliantly and very quickly was monetization. And like Murat was reluctant to put in banner ads, and we didn't want to do too much ads. And so I had only we sold 100 grand of passive ads on CEO the year we sold the site because we were making money from subscriptions, and it was not a big focus to make a ton of revenue from ads. And within a year, I don't know if it's what's public or not, but I believe that they had 40x or 50x the ad sales in a year, right? So they were right away were like had proven to me that I was not picking up the money that was available in terms of doing projects with sponsors and having banners and making content for companies. I had done a bit of that in the early days, but I just Murat and I were a very small team. Murat, I'd be lucky to get him a couple days a month to focus on it, but he was such a genius that it was enough. And so for me, not having a team and coming from this poverty mindset of my business is folded 7 years before. I don't want to have overhead costs, and I was just like terrified. Like so, I never had a team, and so if we sold a sponsor, it would mean that I'd have a promoter that I'd feel beholden to, and I felt like that I didn't like it. I didn't like having to do the customer service or feel like I had to make a post for the person's news or whatever. So I had a mental block about like I don't want there's a limited amount of things I can focus on, and I don't want to have too many sponsors. So they built the team and handled the relationships and just immediately started picking up the money because companies wanted to advertise to the user base. So I thought that was it was interesting. It's like I could have done that and should have, would have. If I didn't sell the business to them, I hopefully would have done that myself because or built a team around it because like that's a lot of value, right? That was latent value
Mhm.
that justified the acquisition for them. They paid a price they paid more than half the deal in shares, which their stock was at a lofty price in 2021. So we got a good price from them, but their stock was high and has fallen quite a bit since. I think so they were keen to do all the deals they could with the high equity price at the time. Um,
So you say that you didn't get paid quite as much as it seemed like you got paid because
oh,
the
definitely
stock
not.
price fell.
No, I mean, I still own millions of spot shares and they're down
Okay.
80%, right? I recently, I have a company with Murat and, we had this capital gains change in, in June 25th. And, I bought the remaining spot shares off Murat and myself just to crystallize the gain for Murat. And and now I have the rest of them myself. So we still own a bunch of, I still own a bunch of the stock.
Yeah, I was just looking at the 4-year chart on that. I didn't realize that spot went to $1.50 in 2021. That's crazy. So yeah, but I've been looking at their latest financials, and this is not investment advice, but at 19 cents, I gotta think this is a really good opportunity here.
I bought, yeah, I bought a lot of the stock at 20 and I bought some at 22. It's misunderstood. The problem is like their results are sort of trailing a few quarters always, like they're going to publish what they did 4 months ago. So if the market's choppy, the results lag, and they have a bunch of investment in issuers. So their results swing based on how junior miners are doing. And they have I don't want to say confused story, because they don't have a confused story if you're paying attention, but they have, they've evolved from an AI mining discovery consulting company to basically a media business with an investment arm. And I really liked the deal they did for Northern Miner. I thought that was interesting and cheap. I really like the people. I love the executive chair, Denny Laviolette. Like he's one of the authentic success stories, fun guy who has a lot of passion for it, and I have a ton of respect for CJ and for Josh, and for some of the young guys that they've got making content there. Yeah, I think it's a difficult thing to be the junior stocks, they do best. Stocks go up on mystery, down on history. And Goldspot had its mystery run in 2021 or 2020, and now it's like a real holding company business. And the audience of investors in a holdco are really small, especially a small one, are so small that it trades at a big discount to its NAV, and arguably it should trade at a discount to its NAV, but how much I don't know. Its NAV will grow in a bull market massively. They're investing in these companies, so I obviously I wouldn't have bought the stock if I thought I was certain to lose money, but it's not a hype stock like
Yeah,
venture.
it's an unusual stock on the venture because it's
It's a
basically
business
a
now. It's an
holding
actual
company.
business. Yeah.
Yeah, it's a business, and you're buying a portfolio of junior mining equities that is relatively low, liquidity, and very cyclical, extremely cyclical in nature. But spot shares, you're getting this portfolio in this business at what I would see is like 50 cents on the dollar. So
I think it's less. I think it's like 35, but
35 cents on the dollar.
you
Yeah.
have you know you have you have G&A, and you have illiquidity, and so what is the right discount to NAV? I don't know. I think the best thing they could do is increase the NAV.
Yeah, that sounds good. Yeah. But yeah, I like spot as an investment here. And it's not a typical junior. So, if you're gonna look at something like that, you better have at least a 12-month time horizon, because you need that time for the sector to really have an opportunity to turn, and for
I
this
think
to
pretty quickly,
become.
like if people care about, like if you can buy it at 19 and people are excited about junior gold stocks, it's 27 really quick. But at the same time, if Nvidia is falling 7% in the morning, and everything becomes a liquidity source, then where does spot go? I don't know what's its low. I couldn't tell you what's its low, 17 or something. Like I don't, it could be everything can get much worse. And so it's definitely not investment advice. And what are you doing in this? Are what kind of investor, what kind of investment is it? And it's tough to know what to do with.
Yeah, are you an investor or a speculator? If you're a speculator, it's probably not a stock for you. Final question, Tom, and then we'll wrap it up, and then maybe do a part two at some point in the future, because I have more questions. But final question, so clear your minds. We're going to end on a good note, giving people some value that you've accrued over 15 years in this business. What would be 3 tips that you would tell somebody who has a job, they have an income, they're young, they're maybe in their mid-30s, they want to invest in risky stuff, they want to slide on razor blades and take a shot at a 10x in the junior mining sector? What are 3 tips that you give to a new investor in this space?
I think it's a really hard space. And I'm thinking about high ROI in my mind right now. And like, he had a different career and but had the wherewithal to focus on sort of to build a network and to focus on the long life super assets, right? It's like what is the asset um that everybody's going to covet? And it's the long life, low cost tier one thing. So he was like I don't know if he was all in, but he was like mostly concentrated next gen at 40 cents or 37 cents or whatever it was, $12 a decade later. But it's those real assets I think are the tier one long life, low cost big guys like Warren Irwin in his fund, he was heavily concentrated on uh on one name like that. So, building a network of who's the real people and trying to identify the, best of breed assets is probably logical. It's possible, it's doable, to the more that you make it your job, then I guess it's about trying to be early stage in the private placements with good terms and warrants and taking your profits where you can and riding the upside of the warrants, or people that come and work in the business I think get much more opportunities from stock options or um, bringing people together, brokering things, etc. But if I'm going to be on the outside, I think you just have to be aware of the fact is that investors come in at the wrong times and leave at the wrong times, especially true in this space. The difference between a bottom and a falling knife is hard to distinguish, right? It's like the despair that you see at a bottom, it's so hard to buy, right? And
It's impossible to buy. The time to buy is when you absolutely won't want to, where everything is negative and you can't see a reason to possibly own it. That's the bottom.
but at the same time, we have a sector, with the exception of something like GoldSpot, where the companies are relying on the equity market to fund their operations. So the reason why it's so difficult is that is this the bottom? As in, like everyone's extremely pessimistic about this name. There's no liquidity in the stock. You could blow on it, it'll go up. But if the issuer needs to raise money, it's going to be likely at a discount to the market price. Like we saw this so recently with MCF. It was like, oh my God, it was looking so bleak at like 10 or 11 cents. And like this, and the worst part was like the company needed money. And I think that's why the market price was declining. And then thank goodness there was a good piece of news about a permit, and this equity ran to 15 or 16 cents. So it financed above where it's just trading. But usually you see financing's done at a discount. So it's like it's really tough to know, is it a bottom or is it a falling knife? It's just really hard. And
So what are some things that can help you now? I mean, I can think of management and their network and their ability to raise capital would be an important piece of
I think
information to know.
management. I was having a conversation with a friend the other day about how like in a private business, the founder CEO is doing everything he can. He probably owns most of the company. But in the penny stock world, it's like very common the CEO or the person doing the fundraising, the broker, whoever, they don't they're not defending their value of the equity. Oftentimes they have very small insider ownership, right? So it's like we'll take new money at whatever terms we can get it because that's where my salary is going to come from, or it's so hard to find it. But it's very tough to raise money at decent terms. And so obviously it just goes without saying, like insider alignment is quite helpful. But then you see a stock like NexGen, which never had high insider ownership, and yet the stock kept going up because it was a
But the asset was so good, right? Oh, the
and yet
asset was so good.
great asset and a market going from out of favor. Uranium went from 20 to 100 or close to, right? So
Yeah, so like if we use the example of NextGen, I think that's a great example. The sector fell brutally. It was a nuclear winter, like pardon the expression, from 2011 basically through 2015 in that sector. And the spot U308 price fell to, I don't know, $17 a pound or something. It might have been lower. And so the last 10 years, basically, it's been almost 10 years, we've had a tremendous bull market where spot U308 went 6x, and NexGen had what everybody agreed was the best asset owned by a junior. So that was you couldn't get.
What I didn't know was because Hathor was sold in 2011 for 650 million, and NextGen's market cap is 6 billion or something, right? Like I didn't see how big it could get.
Yeah.
But if I was around in the 2000s, I would have seen that uranium cycle. But also, Ivanhoe Mines was under cash value in 2016, and it had generational assets and leadership and stuff. So I think if you're outside in looking at this space, like you don't have to swing, right? You don't have to swing, and you don't have to be in the market. And something that I feel like I'm okay at is you got to be comfortable watching other people make money, and you're gonna miss lots of stuff. But if you can buy tier like the big long life, low cost, good quality stuff when the commodity's out of favor that doesn't have an urgent financing need, then that's you got the double upside of it's likely takeout candidate, and the cycle will come back into favor for it. So it's just a really tough space. You don't have to be in it, and building a network of people who you think are real that could help you identify what is a real long life, low cost, great asset. And the rest of the time it's just like we're speculating on hot potato basically. And it can be very lucrative, and if you get to know it, the more time you spend in it, you can be a winner in it. But yeah, if you're going to be a dabbler, then yeah, being conservative and you know moving slowly. You also just have a broker. There's a couple of guys at Haywood Securities that I like and work with that could put you in. Like I think John Jones is my oldest friend at Haywood. He just sold his clients who were dentists and doctors and whoever, just sold them Ivanhoe Mines and NexGen and just the big names, and people had pretty good returns buying well-known stuff through a conduit like that. But yeah, you don't have to buy everything. You really actually got to consciously not buy anything that if it
So
isn't.
It's the Warren Buffett saying where you can stand there and not swing and wait for the fat pitch. You don't need to swing at all the pitches. So
It's
there's
pretty hard.
lots of times to stay on the sidelines. And I mean, if there's a few things I take away from what you just said, it's the bigger macro cycle is very important. So being aware of where we are in the cycles. And if you can time a bear market bottom to within 6 months in the junior mining sector, you're probably going to do pretty well because the turns are so explosive and so powerful that you don't have to get the exact bottom right, but just understand what you're dealing with. You're dealing with a very volatile sector where companies always need to come back to the market to finance. You also want to be aware of how much capital they have in the treasury and the alignment of the management team. Are they going to be able to raise capital on reasonable terms, or are they going to have to do it at a big discount to the
It's
market?
it's gotten it's gotten really tough to raise money, right?
Yeah.
When you ask that question, like the thing I want to say is like, don't do it. Don't do this.
Don't do the sector.
Don't. No, like do it if you can commit to it, but don't dabble in it. Oh,
Okay.
if
Don't dabble into your mining. Either commit and do it full time or just stay away.
it's a tough one. I do think I can generate some alpha in this space and continue to, you know, but pick my spots here and there, and waiting in some bigger positions. And it's uh it's treacherous though, you know what it's like.
Oh yeah. Oh yeah.
I don't know anything else. That's my problem
That's
now.
it. Yeah, yeah, you don't know anything else. Yeah. But I think also the takeaway for me and knowing you is when I met you in 2011, I would say you really didn't know much, and you were very wet behind the ears. And now look at you, 13 years later. You're pretty savvy. I've seen your track record pretty well, and you're pretty good at timing things. And I would say that you know the ropes at this point. So I think that's an encouraging example for others. Like if you're committed, if you really are interested in this game and you want to learn it and you put the time in, you absolutely can, and you can do well over the long run. And
Yeah.
and you know, where did you make your money? You made your money in 2016. You made your money on CO.ca, which took you 10 years, not 10 years, maybe 8 years to build up to the point where
Fine, yeah.
you could sell it for a pretty sum, um, and getting in good deals where you knew the founders and getting in at whatever 30 cents and catching, you know, lightning in a bottle to $3, right? And not everybody can do those, but if you really want to, you can find a way. You can find a way to get invited into those financing.
I think I think it's maybe Scott Adams, the writer. He says it's like when you connect, you learn something really well and you connect it with something else. Like at that, there's like some alchemy at that connection point. And you know, we were talking about where we make money, but like the biggest pass I ever had was actually on a Bitcoin stock, right? And it was because it was like we're mining people in Canada, and we got a mining process, and this is how we build mining companies. And you know, some colleagues and I were like, we could do like a Bitcoin mining stock is could be the exact same. And that epiphany and connection, and then all the, you know, the process you'd build a mining company around. We did that with Bitcoin mining in 2016, 2017. Like that was the most powerful thing ever. But it was like, it was a new business with friends that got caught in a hurricane, but it was in the connection. I was like, I'm learning the mining ropes. And then we applied the mining ropes to the Bitcoin mining thing. And it was like, all the mining people supported it. It was crazy. So I don't know. I'm like, my process is evolving. It's like the things you're looking for, that you know, that sweet spot's kind of changing. And you know, I now it's just so hard to find those management teams that really obsess about defending the equity value and can raise money and watch the treasury. It's like that's the thing that spooks me the most, is just you know, finding, you know, someone who's going to be aligned with you. So if you see that guy, Robert, you can let me know.
Finding someone who's going to be aligned with you. Okay, I think we'll leave it on that.
Okay.
Tommy, thank you very much for this conversation. I really appreciate
Robert, thank you for your 14 years of friendship
it.
and all the support on the website. Your posts, not before we had a chat site, you were you know, you had made the most viral posts, you know, when you did your little charts about gold breaking or whatever. That stuff was like candy for traffic, and you really helped. And you never got enough credit for it. And you are the most followed user on CEO.ca among many achievements. But thank you.
Cheers.
Hey, buddy.
Thanks, brother.